integrating analytics into the audit plan itself. Now I'm taking more of that macro view of things. I start off with it, and I'm still a big believer. If you're not doing a lot of analytics, or even if you are, it makes a lot of sense to do a bit of a cost recovery analysis and try to look for where can you save money, because even anyone who's doing these types of audits, it's a great way of finding a bunch of money that audit could then somehow maybe claim a little bit of, so that they could buy some technology with it. So you find $1 million and say, hey, can I now spend $10,000 on data analytics and training and all that good stuff, and that's a great way to make that happen. What data files should you get? I find that taking a look at the general ledger files, at the AP invoice detail distribution. What is that? That is your accounts payable, but broken out by the general ledger, so you can kind of see, how does this play out within the general ledger. You may have items there. I may try to open up a file to show you an example of that, but if we don't have time, it would be something like my expenses would be, a portion goes to consulting expense in the general ledger, a portion goes to travel and entertainment within the general ledger, and hence that's kind of the distribution. Purchase order is a good one, and pricing list as well is a good one to take a look at. And from a profit opportunity point of view, I've written a book on this for John Wiley, and it goes through all the different types of cost recovery that you could find within your accounts payable. So I find looking at accounts payable is a great area, but another few areas that are wonderful are health benefits, lease auditing, telecom auditing, and then advertising agency auditing as well. So these are all different types. But what I find, though, is as you're doing these audits and thinking of the analytics associated with it, I find it might start out simply as like a duplicate payment or an overpayment review, but it quickly becomes a bit of a contract audit. And that's why I said you want to look at the distribution, because what you want to start looking for are kind of weird trends in that distribution, but also you want to kind of look at this list of profit opportunities that you could find at a company and maybe do an audit of these areas, or bring in an auditor to help you do an audit of these areas. Some of these areas are really complex, and it does require some help. Looking at the different cost recovery opportunity tests that you could provide, imagine taking your general ledger and taking your accounts payable distribution and summarizing that by vendor and by general ledger account. What you can do there is start to find how many general ledger accounts do I only have one vendor associated with it. How many of them have too many vendors? We have office supplies, and we have, let's say, 100 different vendors related to office supplies. We want to kind of limit that and maybe do some strategic sourcing in order to kind of bring down that number a bit. These are all different types of ways of finding opportunities for better procurement within the company. You therefore also want to take a look at that list of areas that you might want to audit. Take a look at your top 100 vendors, look at trend analysis over time. These are all areas where, by looking at the spend, you might be able to find a few areas to go in and do an audit of and find some money. I also like to take a look at purchase order pricing, and especially the trending of that pricing over time, and maybe some differences to the actual invoices. You'd be surprised how many times there's a mistake in the pricing that leads you to spend a lot more on an ultimate invoice that shows up than you should have paid in the first place. Okay. Now, what I wanted to do is I'm going to talk a little bit more from a general point of view, but then I wanted to even just show you some specific things that you could do in Excel that I think would be really interesting, and hopefully this will help you in some way. And that is in kind of stratifying your data. And I'm a big believer in stratifying data, and I'm going to show you how to do this in Excel. Actually, Charlie Walker at Top Cats, Top Cats is an Excel ad, and I have to give some recognition to here because he helped me with the VLOOKUP that we're going to talk about in a second in Excel. But the stratifying your data, I mean, I bring it up in the audit planning phase because I think it's an area where by stratifying things and maybe doing a pivot table of that data, you can start to better understand at a macro level your information. So again, you know, I'm kind of saying you really should try to get as much data as you can, focus on saving money as much as you can in the audit planning process around data analytics, and then, you know, get this macro view from a stratification point of view. So I just want to make sure, and yep, we do. And hopefully I'll be able to get this to work for you pretty well and be able to explain it to you in the time that we have today. It's a little more advanced of a topic, you know, but it isn't too bad, you know, from an analysis point of view. You know, I really like the approach that I'm showing you here versus what is in my slide deck, because the slide deck that I have has a really advanced if statement that I'm not even going to put into Excel because it's not worth the time. And it rather, you know, just kind of show you this approach to stratifying things. Let's imagine you had your values over here, your invoice amount value here. What you can do is set up you can set up a stratification over here. And in this case, I mean, you really can put in any limits that you want, and then the actual term over here. I've set this up based on standard deviation of the entire file, like I calculated using descriptive statistics in Excel, which basically is this data analysis tool pack. So I took the entire invoice file and figured out that the mean of that data was 827 and the standard deviation was 6344. You know, if you ever want to get some really good statistics on your data, I mean, this is a good side point I might as well make. The data analysis add-in is something that you can add in to Excel, and bear with me, they really hide where you do this, but you can go into your options and go into your add-ins, and hopefully you're seeing this, and at that point you're able to add like these inactive application add-ins. You can add them up here. So in other words, if when you go to your data menu and the data analysis doesn't show up, that is why. But by highlighting that, what I can do is I get a lot of different tests, and someone had mentioned a z-test, right? So we have the z-test in here. I have never run it here, but so I will admit that. But there's a lot here you could run. We're going to run the descriptive statistics. From an input range point of view, I'm just going to highlight all of my invoice amount data and hit the OK button. And I'm going to create a new worksheet. I can create summary statistics, and I'll leave it at that right now and hit the OK button. And what that did was provide basically what was on that other schedule a second ago, that other worksheet where the mean was 827, the actual standard deviation 6344. And going back to my payables data now, you can kind of see I've created that standard deviation starting with the average. I've added it a couple of times and I've minused it a few times, and then I set up this, like, you know, really large you know, minimum that you know, most likely will not be hit in this data file, and then that was like below 2 standard deviations. So what we're basically doing here is setting up this little table and then doing a VLOOKUP to this table. So let's look at this VLOOKUP. The way I do that is I hit that FX button once I've created the VLOOKUP, and it's looking up the value I2, which is 2657. It's going to this table array here. It is looking to add based on the first value that you're finding here. It's going to bring over the description, which is in column R. And this is what's interesting. Almost every time I do a VLOOKUP, I do so in a false situation. So you actually type the word false here. But because I'm doing it in a true situation, and you can notice here the 2657, it's the average to 1 standard deviation, which is this value right here. It basically, in the true format, what it'll do is it'll find it'll say 2657. It'll go over to this table. It'll say, okay, it's all greater than these. It's greater than this one, but it's less than that one. Okay, I'm going to put average to one standard deviation. So that is what's then placed there. So it for each one of these amounts, it thinks it through and says, okay, negative 5517 to 827, that's the one. I put that there. And because you're doing it in a true format, it's doing this type of fuzzy matching. So everyone was asking about fuzzy matching. It's kind of like a bit of a fuzzy match there, where it's looking between the range and then posting a definitive answer based on that range. So again, that's how that works. If it was false, it would only write the value here if this value exactly met this value over here. So this would have to be 827 for average to one standard deviation to show up. So that gives you an idea of how that VLOOKUP strata was completed. And I'm just going to see here if quickly I can find it, and I cannot, so let me go back. So now that I have this, what I can do is I can create a pivot table. So creating that pivot table, yeah, it looks about right. And I am going to bring the strata into the column. So I have the strata up there. I am going to bring the invoice amount value down there. Okay, so I have it by total. And now what I've been talking about, and I think this will work, is kind of doing it by date format. And I should be able to group this. Good. So what you can do is once you have the dates over on the left as your rows and the strata as your column, in this case, what you can do is go, click on any date and select Group Field from that menu bar up above. And you could group, say, on month and year, or let me just do it by year. Well, let me do it by month and year. That's kind of interesting. And let me get rid of this so you can see it. So now you have the stratification of all of your data based on a month and year kind of formatting. And it is kind of interesting just to look at the differences between years. I mean, just looking at like 2010 to 2011 as an example. And you could do this also from a grouping point of view. You could actually group this by quarter and year if you just, if you wanted to do that instead. That might be a little more valuable. But just wanted to finally note this, if I can find it, is we have the pivot chart in the menu up above here. They call this the ribbon. You could select the pivot chart and do more of like a stacked column. I think that'll work. And now, if I can, oops, giving everyone a quick lesson in pivot tables here. But now you can kind of look from a quarter-to-quarter point of view of how things lay out. And it is very quickly you can start to see in Q4, in relation to any other quarter, the below 2 standard deviations is really weird. In quarter 2 of 2010, there was probably more over 2 standard deviation than any other time. And it's really interesting how you can start to, when you're planning your audits for the year, looking back on, say, last year, you can really start to get a sense of what is really strange that's happened within this organization in the last year that we may want to focus in on as we're doing our audit. So one of the things that I noticed is that, and I wanted to kind of conclude more so utilizing a discussion I've given before on scoring. A lot of companies will say, how can you plan data analytics? We can summarize by month and year, we can stratify things, that's interesting, but how can I really know if I have a problem? And all of this kind of brings me back to some work that I did many years ago for a cement plant company where we had 10 cement plants, and everybody had what was known as a DEC-VAC system, where I could actually look into their system and download data and do analysis. And what we did was we had done some general ledger and payables analysis across every company, but we really focused it in on duplicate payments, journal entries that didn't net to zero, and we were able to immediately pull them out. But when you had all 10 companies and you ran these more detailed reports, you could start to score which location deserved an audit more so than others. So I'm a big believer in running lots of reports across the entire company, and then summarizing that, say, by business unit or by department or whatever, by anything, company code or something, and then focusing in. So for all of this integrating planning analytics, I'm a big believer in taking a host of reports that you may have and applying that to your data so that you can then determine who are the top people that we should be focusing in on. Okay, so when you think about some of the sampling problems that are out there, this slide I'm going to jump over a little quickly, but the final math here is that you have like a 1 in 800 chance of judgmentally selecting something and having it be a problem, because it is such a more random way of doing it. What you could do instead is use more of a transactional scoring approach, where a single score is given to every transaction based on its severity. So we may have a payment transaction that looks like a duplicate, is related to an employee to vendor, is round, is posted on a weekend, is posted after hours. All of these kind of audit reports are then boiled together and summarized by enter, by vendor, by department, and we'll even show you like a scatter graph that you could build as well in that area. And what we're focusing on is kind of the severity of the, especially by business unit if you're doing a bit of an audit planning across the entire organization. And then what you could do is kind of sample in on each quadrant of that transactional score. What I like about this approach is that the resulting approach is now a way of you calculating risk. So you can actually mathematically calculate your risk and then look at it across your entire organization. That then can be summarized by who, when, and where. What I tend to do a lot of times, what I do here is when I'm summarizing, I may summarize the total value of, say, journal entries, but then by who entered them, by when they were entered, by where they were entered in the general ledger. But most importantly, as opposed to just looking at the total value by who, when, and where, that's one way of looking at it, I also want to look at the score that people got from a who, when, and where. So there may be time frames where there's a much higher score that's being associated, or to people that are entering those transactions, or it could be departments that are driving those transactions. And then even into the accounting themselves, like is the revenue area, so if I do it by account type, now if I summarize my scores by account type, do I find that the revenue area has a lot higher risk in my reporting, so like basically a higher score in certain time frames. So those are time frames and business units that I want to focus in on, because it looks like they may be playing some games with the revenue that they're posting. So once you calculate the score, it's really easy to kind of summarize it and look at it in these different ways. And if anyone challenged, why did you audit us versus that other guy, you can really, in this case, you can mathematically show them how you got to that final number. This is something where basically I have a scoring by supplier. So what I've done here is I've said I've run 7 different reports, and each report shows up on a different tab down below. So we have sheet 1, sheet 2, sheet 3, 4, and 5 through 7. And what I'm doing in the top weighted summary sheet is I'm actually VLOOKUPing based on the supplier number. So just looking at this VLOOKUP, what are we doing here? We're taking the value in A2, which is supplier number 1, and I'm going to sheet 1 for the area A2 to be 100, which was, I guess, the 100 vendors that we had. And then I'm bringing over this report 1 score, and I'm bringing that back to here if there's a match. So if there's a match, we get a score here. So did that vendor show up on report 1, report 2, report 3? If so, bring the score back here. And all I'm doing is then this one is actually looking at sheet number 2. This one here is looking at sheet number 3 and 4 and 5, 6, and 7. So this is a way where in Excel I can very quickly bring back or bring together all of these scores. So, just if anyone's asking the question, I have all these reports that I've run, and I've run them, let's say, by journal entry number or by supplier number here. If you could just get a summary of that so this could be your detailed schedule here, but if you could summarize everything by supplier number, the report that you had, or by journal entry number, you can then assign a score to that, and you can carry that score back into this analysis. Once you've done that, you can then add up the scores. So, all I'm doing here is I'm summarizing basically from cell C1 to I1, and I'm getting all 7 scores, adding them up, and getting back to this 45%. Once I have that, I can, sort these from high to low or low to high, using active data here, but you could do it anyway. You could start to filter things. There's quite a bit that you could do to kind of highlight, and this is a great way to look at it. This is doing it by supplier number. What you might ultimately want to do is take a look at this more by business unit. So if that supplier is related to, let's add a column here. Let's say, many of these suppliers are from company A, and you had a combined kind of listing, and then you had a lot of other suppliers, down here, that are from company B, and they're in the same kind of final summary format that you have here. Oh, sorry. Then what you could do here is then just summarize on that column A or B or whatever to ultimately get to a summary by business unit of your particular scoring. And the last Excel thing I wanted to show you, I had created, let's see here, yeah, this might be a decent one. Okay, so one of the things you could do is also take a look at that score that we just talked about by date. So by summarizing across all companies, you could take a look by day, and invariably there's always a day that kind of jumps out at you as a strange day to go look at. So, and one last thing that I would suggest doing, because you have all this data, it could be 1,000 suppliers that you have, let's say, and it's kind of hard to graphically represent 1,000 suppliers. I think utilizing a scatter graph, and we'll just go into Excel and show you how to do this if you've never built a scatter graph before. What you can do, I'll just copy this score over here. I don't think I've ever done this before. So if I take this, if I highlight the invoice amount and the final score now, and I say Insert Scatter, I can essentially, let me just move that chart to a new sheet. Okay, I can basically scatter all those scores based on dollar amount, and you can start to see, who are the ones that are high scoring, but also from a higher dollar amount as well. That would be kind of my high, dollar amount, high score range that I'd like to look at. Probably some folks that are more in the lower scored, lower value reporting, I would be less interested in. So, going to this chart, a little more relevant, probably a little more relevant or accurate. What I tend to do is then sample, not only will this help you in your audit planning process, but if you are then going to pick certain areas to go look at, I usually sample from a few different ones. So, I don't just pick the top quadrant and say that's where we're going to put all of our time. It is a good idea to not put all your eggs in one basket and look across the different scorings. Again, this is a way to organize all of the scores into one scatter graph, especially if you have a lot of data that you're analyzing. So, one other way that I wanted to show you, and I utilize this product, Batch Geo. You have to get around the fact that you're going to upload your data to Batch Geo. So I don't want to say you're basically uploading to their website. So you may not want to do that, but I think to graphically or geo map your data is really an interesting way of analyzing your data. What you can do is analyze or summarize the scoring that we just talked about if you had vendors or customers that you're looking at here. It could also just be your business units or locations, and if you summarized it by location and put the address of each location, it might be a nice way to show that in an audit report or audit committee meeting to show that you've looked at it across the world. And from a geo mapping point of view, you can go to this website Batch Geo, which I'll attempt to bring up here for you to take a look at. And it's a pretty simple website to use. They do, I think they have like a $100 a month version if you really use it a lot and you have lots of different things that you're doing. My web is taking its sweet time to come up today, but essentially you basically drop your data, you click and copy and paste your data right in here. And I mean, I've copied 20,000 rows into that little, set there, so that's how it works. But you copy and paste it from Excel or a text file, and once you've done that, you just hit the Map Now button, and it will map that data for you. And I'm trying to think, I just took whatever data was there that Batch Geo had, and it then will map that for you so that you can analyze your scoring that we just talked about based on location.